It's about that time of day again. My name is Joseph. Tuesday evening, September 4th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil, oil is bearish with a spike in channel pattern. And I'm looking to combine the high of this channel with a key reversal line for some great selling opportunities tomorrow morning. The S&P is bearish with a wide trading range. Keyword there is wide. And that tells me to look for selling opportunities, but I'm waiting for buyer failures and a very important momentum confirmation to sell the Emini tomorrow morning. Nasdaq is also bearish. It's got its own wide trading range. That tells me to stay patient and use the two-try rule to sell back down to those lows. Gold is bearish, the strong move into a trading range today. That tells me we're bearish, but we're focused on selling the high, and I got my eyes on the two-try rule on gold for tomorrow. And don't forget about the euro. The euro is bullish with a 1, 2, 3 reversal tonight. That tells me to keep my eyes open for buying opportunities. And you know me, anytime I see a reversal, I'm looking for those hidden channels on the chart for tomorrow morning. Well, we're back after the holiday weekend and ready to kickstart the fall trading season. We got a couple strong trends, couple trading ranges, and of course, plenty of big opportunities into Wednesday's trading session. We get a short week and get a great opportunity to make some money here this week. But as always, I got a great newsletter in store for you guys and gals tonight. But before we get into those charts and put the plan together for Wednesday's session, I need to remind you, if you're watching this evening on YouTube, you can find a detailed description of this entire trading strategy. It's written out right here on my blog at sidewaysmarkets.com. I'll put all the links in the description of this video. Also, if you have any questions about anything covered in the video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing. And don't forget, when you subscribe, hit that bell icon so you can always get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets. Make sure you join our mailing list. It's right in the upper left-hand corner. Again, I'll put all the links in the video description here on YouTube. Give me your name and your email address. I'll send you an email every time I publish something new. If you're hanging out on social media, don't forget you can find all of my links to follow me on socials in the lower left-hand corner. I put stuff in my social media you won't find anywhere else on any of my other channels, so follow me in the lower left-hand corner. How about those charts from tonight? How easy is this, right? All the charts that I work hard to produce every night and we use every day in our trade room, you can grab those charts even if you're not a member here at School of Trade and be ready for tomorrow's trading session. Or how about a free pass? Upper right-hand corner, if you're not a member here at SOT, I've got a free pass for you. If you want to come out and see what we're all about here at SOT, grab that free pass, right, and grab a free pass to our trade room tomorrow. And if you have any questions here, don't forget you can always hit me up. Post the questions in the comment section below, and don't forget you can always hit me up on live support on the right-hand side of our website. Boy, oh boy, did that holiday weekend just flew right by, did it? Here we are, though, now. We are kicking off the fall season, the month of September. I've been saying this for the past few months, guys. Make sure you learn to trade before September, because we got September, October, November, December, January, February, and, of course, March into the first half of April. It's not going to be to the end of the first quarter that this volatility slows down. We expect this to be the best of the best trading opportunities coming up in the next few months, and we saw a great example of that today. Lots of great volatility. And, of course, going into tomorrow's session, we got some big news here on the calendar for tomorrow. Tomorrow's Wednesday, September the 5th. We'll see how many times I call tomorrow Tuesday, right? Short week. We've got tomorrow's big news. Tomorrow is at 8:30 Eastern time, right? That will get things going early in the session. And then don't forget, later on this week, we're going to have the inventory report on Thursday, right? It's not going to be tomorrow at 10:30. And then don't forget, we'll talk about this tomorrow night. We got the employment number, the non-farm payroll number on Friday. We always have a very specific plan of attack for those Friday non-farm payroll numbers, so make sure you keep up with me here as we go through the rest of the week. For tomorrow, though, as you can see, though, international trade at 8:30. Don't forget, we open up our trade room at 8 o'clock Eastern time. We'll put the plan together, update those charts. We'll trade around that news, and hopefully tomorrow that news will get things moving for us early in the session tomorrow morning. Now, speaking of tomorrow morning, again, we open up our trade room at 8 o'clock Eastern time. I got a free pass for you on our website. Grab that right in the description of this video. But in the meantime, let's grab a chart here tonight. We got crude oil, S&P, Nasdaq, gold, and of course we'll wrap up tonight on the euro. Starting off tonight on crude. Crude is bearish with a spike in channel pattern, a strong bear run, a measured move, and reversal line on the chart this evening. As I zoom in on this chart here, right? First of all, the spike in channel, spike down into a channel, right? Spike down into a channel. You know it's a spike in channel when you see a spike, right? So what's a spike? A spike is a strong move in one direction that never pulls back to the moving average, right? Anytime we see a strong move in one direction, we always expect to see that pull back and retest the low. If they go through that low, usually becomes a spike in channel. Mark up these two lows, back to that high, right? That creates my channel. Now, spike and channel patterns are really, I would say if there are, out of the top 5 patterns, or let's say out of the patterns that every new trader should learn, right? A spike in channels in the top 5. By all means, spike in channels, wedges, trading ranges, triangles, right? These are some of the easy patterns we see spike in channels all the time. I have a full chapter on them in my free trading class, which I will link up in the upper right-hand corner here if you want to learn more about, right, spike and channel patterns. I'll link it up, right, in the free trading course. I'll also put that in the description here, right, on YouTube as well. So grab that, right, grab that free class if you want to see literally hundreds of examples of spike and channel patterns. But spike and channel patterns, what they do is they tell me I could basically sell off the high, right? But more importantly, I can find resistance levels to sell above the high. That's kind of the interesting part about spike and channel patterns. Spike and channel patterns are notorious for giving us these really deep pullbacks and then crashing right back down again. Now, in addition to that, we also have this really strong move down. Right now, what is a strong bear run? What does that tell us? Well, remember I said earlier, anytime we see a strong move in one direction, we know the odds are really good we're going to go up and retest that low. So when I see that strong move down for the bears right now, all of that momentum running lower here, yeah, the odds are pretty good. We're going to go up and at least go back down double bottom there, right? Hopefully back down right to that measured move, right? So that strong move down reminds us anytime we see a strong move in one direction, look for those selling opportunities after a two-legged pullback and look for that retest, right, of the low. And then one of my favorite levels of resistance, okay, is this reversal line here at 68. So, put this all together right now, right? We've got a strong bear market, strong bear run. We're trying to sell up around the high of this channel, right? And one of my favorite levels of resistance, I call these reversal lines. What are reversal lines? Reversal lines are really pretty simple. They are prior support levels that can then be used as resistance. Right? I mean, even in the most basic, trading 101 lessons, we talk about what was support, right, can be used as resistance. So this right here is a great level of resistance here, and you can see how it's all coming together pretty nicely. Strong bear run tells me go up, sell it back down. Bear channel tells me sell the top of that channel back down. It's bearish. I want to find resistance. Where's resistance? Well, there we go. 69, 68, right? That's the resistance level. I've got a prior support trend line, which is also resistance as well. So in all reality, guys, this whole area right here, really is an attractive area for selling opportunities. So we'll talk about that. What if price goes up into that area here? We'll also talk about, right, what if this market keeps going lower, right? What if it keeps going lower? Because, we got that strong move down. I've got that measured move waiting around that 68, 66 area. That's going to be, right, a nice big target, right, as well. So what if price goes up? What if price goes down? What if price goes sideways here? Well, if we go higher, if we can get back to the high of that channel, right, we go higher here, we will undoubtedly be, right, we're going to be above the moving average. And when we get above the moving average in a bear market, notice how those are the opposite, right? When we get above the moving average in a bear market, we then look for the buyers to try to buy the pullback, right? That'll be a lot like this pattern right up here. If you look in the upper left-hand corner here, right, see where it goes up. And this would not be a pattern. This is how it will look, but you wouldn't take this pattern the way it's set up today. But notice how it goes up. They try to buy the pullback, right, and see how the market just collapses right after it fails. That's a very similar, I mean, again, you wouldn't take that trade because the market was bullish at that time. But with a bear market, though, we get back above that moving average. Now we know where those buyers have their stop losses, and we can sell right into those stops as we go lower. Okay, that's the first selling opportunity that we're going to get going lower here tomorrow. Again, incorporating the resistance trend line, incorporating the top of that channel, incorporating that reversal line, right, with all of that resistance overhead. Now, once we go lower here, it's very tempting to want to chase after this move, especially if you didn't have the guts to take the failure. But we don't want to sell low. What we want to do at this point now is draw a trend line off of these lows, bring it up to that high, and create what I call a hidden channel. And you'll be amazed how many times we'll get that little pullback here. And remember, right, you're going to use that low, right? Remember, that low can also be, right, that prior low can be resistance. So that's going to be the follow-up trade, right, that we'll look for as we go lower. Now, I want you to remember this sequence, right? Remember this sequence because we're going to talk about it a lot more, especially on the Nasdaq and the gold here today. Remember that, right? Remember this sequence. We call it a failure into strength, strength into a pullback. Say it with me here. We call it a buyer failure. Buyer failure leads to strength, right? That strength, we don't chase after it. Right? We look for the pullback and a run back low. Failure into strength, strength into pullbacks, pullbacks, and a retest of that low. Now, again, as I mentioned earlier, I've got a great free trading class for you if you want to learn all these patterns. Upper right-hand corner, you'll find that information icon in the upper right-hand corner. I'll also link it up in the description of the video here right now. Pause the video, grab that free trading class, because like I said, I've got literally hundreds of hours of real pattern examples of all of these patterns. So that's if the market goes higher here. What if we go right? What if we go sideways? What if we come up, right? We move lower, but we bounce off of that low. Okay, anytime I see a double bottom, okay, keep an eye on this for tomorrow because we had, boy, what was it? Almost $2.50 a range today. If you look at that top, right, at 71.40, right? I mean, that's a big move, right? 69 to 70, 71, so almost $2.50 of range. That's a pretty big range for oil lately, right? A couple of years ago, it wouldn't have been a pretty big range, but lately it's a pretty big range. And oftentimes we see these range-bound markets form the day afterwards. If we see a double bottom here, right, as market goes lower, now we're range-bound. Okay, and I want you to remember this because we're going to talk about this again, okay, on the E-minis coming up next, right? Remember how this works. Anytime we see a strong move lower, we know we're probably going to get a pullback and a retest of the low. But if it bounces off of that low, right, if we see it bounce off that low, and again, wait till you see the S&P and the Nasdaq and you'll see what I mean. When we bounce off that low, now it becomes a range. Now, when we see a range, a very specific plan, 2-try rule. 1 try, 2 try, back down in. And I'm going to give you a little secret, a little tip here. With that 2-try rule, look for that higher second try. If you can get a higher second try, I'm not talking about a blasting higher here, right? I'm talking about what I always describe as it gets stuck, right? It's not going to blast higher, right? It's not going 1 try, boom, big high, right? That's not it. We're talking 1 try, up, 2 try, and then collapse. Once you see that collapse back down, bingo, that's my sign now to sell back down again. We call that the two-try rule, right? The two-try rule. And again, you can learn more about those, all of these examples in our free trading class in the description in the YouTube video. So that's if price goes sideways here. What if price goes lower? If price goes lower, this will likely be in the form of another spike in channel. But wait a second, I thought we had one spike in channel already. I'll tell you right now, we get spike in channels that blow out into smaller spike in channels all the time. So be aware, if we keep going lower and we don't get that pullback, this will probably turn into its own spike in channel, right? Kind of like a spike in channel inside of a spike in channel. And as you know, right, we want to sell at resistance. So find those resistance levels and sell right off of those highs. Okay, we don't want to chase the move lower because we know, right, that measured move is hanging out down there. And if we do run down to the measured move, don't forget, failure, back down again. We almost always see a measured move touched twice, right? Once on the first test, twice when it bounces, right? We can get that failure going back down again. So keep your eyes open whether it goes up, down, sideways, but how would it reverse? What would a reversal look like? Well, again, as I mentioned earlier, part of my free trading class, we'll teach you more about this stuff in that free class, but I want to see what I call a 1, 2, 3 reversal. Here's how it looks. 1, strong counter trend move. 2, pull back to the moving average. 3, strong move through. 1, 2, 3. 1, strong counter trend move. Now that strong move counter trend, right, is what I call, it's the lean in move, right? It's a move that happens on such strength that all of a sudden you find yourself leaning over your keyboard, right? You know what I mean, right? You see those big blast off moves sometimes and you go, oh, what's going on here, right? Somebody woke up. That's a type of personality you want to see this thing running for leg number 1, okay? It shouldn't be lazy. It should be a real strong move. Now, we got to pull back to the moving average. That's a second, right? That's 2 of the 1, 2, 3 reversal. And 3 is blammo, big blast higher. That big blast higher, that tells us, no, it doesn't tell us buyers are here. It tells us sellers are getting out of here. That's what it tells us. When you see that big blast higher here, okay? And remember, you can't just rely on a strong move higher because look what happened earlier. Strong move higher in a bear market is oftentimes seen as a failure. Strength, pullback, back down. Right? So be careful not to look for just a blast higher. It's going to go strong blast higher, right? That lean in, right? That, ooh, what do we have here, right? Type of personality. Hold the pullback, blast higher. Now, what do we do then? From that point forward, once we get that strength, pullback, strength, now we don't chase, draw that trend line up, find that new channel, you guessed it, and we're buying that pullback right off of that low. I like to go out and find that high as well because that high, sometimes we'll get that even deeper pullback like this, right? Or it'll pull back even deeper, failure, bam, right back up. Same patterns that I talked about for the downside, right? And again, if I'm talking Greek here right now, if I'm speaking a foreign language for you, right, you might speak Greek, right? If this is going way over your head right now, don't worry. It's why I call it School of Trade. I'm teaching you guys how to do this. Grab that free course in the upper right-hand corner or grab it in the links right in the description there. That way you can learn more about this trading strategy. All right, let's keep this party rolling. You got a lot more to cover here right now. And a lot of what I discussed on oil is going to come right back into play here now on the E-minis. The S&P is bearish with a trading range and a measured move on the chart this evening. The bears took control in the overnight session. You can see here, right, if I go back in time, the bears, there was no doubt about the fact the bears, right, had control in the overnight session. They got their two-legged pullback, their failure strength into pullback, and they retest, right, and they retest that low. But look what happened. The sellers failed, right? They failed to do what? They failed to extend this move lower. And of course, anytime I see a double bottom in a bear market, I now know this has to be a trading range. In fact, as I record this video right now, I'm going to tighten that range actually right there, right? A little bit tighter, right, of that range. Now, knowing that we have that trading range, okay? Trading ranges are pretty simple, right? I've got this bear move down and we start going sideways, right? So strong move down into a trading range. Now, we talked about this briefly on the crude, but the bottom line is once you see that double bottom, you know we're a range. Then you know it's all about selling up above the top of that range. There are actually two patterns I look for. One is going to be the one try, two try failure, right? One try, two try failure. And the next one, remember that two try, remember I said earlier, right? Those higher highs, remember that two try failure? The next one's going to be what I call a breakout pullback pattern, but it's my variation of a breakout pullback. I'm going to want to see it push through the low. How far? Far enough to get that moving average below the low of that range. Then I'm looking for that one two-legged pullback, right, and a follow through as we go. So these are the two most reliable ways to trade a short-term trading range. Again, it's the two-try rule, right? The two-try rule above the range, and of course that breakout pullback pattern down below the range. And again, like I mentioned earlier, you can join the free trading course, and you can see lots more examples there, right? Lots more examples there will tell you, right? Will show you more of those, right, examples. But I want to make a point here, though, because it's something very, very important right now on this chart, and that is the size of this range. Okay, now when I go back to my chart here, you'll notice the size of this range. It's not a small range. This is not just a run lower into a trading range, right? That's not the deal right now. It's a really strong, right? It's a really wide range. Here's what you want to be thinking about when a market has a really wide range. When a market's range is really wide like this, right? It's really wide like this. Let me get back onto that real quick here. If we go down, right, we pull back, we double bottom, and we go higher here, now we have this really wide range. Okay, now here's the problem. The momentum can easily build as this market goes higher, right? So as we go higher here, this market now, it's going to feel, right, like it's bullish, and it pretty much will be. Right? At that point, the market's going to be so, again, the momentum, the wind will be at the back of the buyers. So for me to try to sell into, right, a two try here, that's just suicide. It's trade suicide. The momentum is way too strong. What's going to happen is if it goes lower, you're going to see buyers come in, and they're going to buy that trap, right? You're going to be the sucker, right, that's getting stopped out. And right when you're getting stopped out, those buyers are going to be cashing big paychecks. Okay, now that's an option for tomorrow, right? That will be an option for tomorrow, right? That little two try, and basically what you're doing is you're trying to capitalize on those rookie traders that don't understand why a wide range is such a big deal. Remember, the key to a wide range is that momentum can build, right, as we start going higher here. So the potential for a full reversal tomorrow is huge, right? It is, I would say right now, it's 60-40, right? 60% will stay inside the range, 40% we break out and we go higher here because that momentum is going to build so strong here. So how do we get short off these highs? What I like to do is I wait. Rather than taking that failure and trying to sell it back down here, what I'd rather do now is wait for that run lower, get that momentum showing me proof here now, and then let's go grab that low. You know what I'm doing. Yeah, grab that low, find that new channel, even grab that low right there, and look for that sell going back down to retest that low, right? Does that make sense, right? So the wide range means momentum. Momentum is just too strong. So instead of me going one try, two try, failure back down, Again, the momentum is way too strong here, right? Look at, I mean, this thing looks bullish by now, right? If this wasn't a range, let's be honest. If this wasn't a range, I would say, oh yeah, strength, pullback, strength. They bought the deep pullback. We're bullish, right? If you didn't know this double bottom was a range indicator, right? If you didn't know double bottom was there, you would probably think, well, I'm thinking too, right? It's a range bound market, or sorry, it's a bull market. So knowing that now, what's the best way to capitalize on this? Now, if you want to be a seller, it's one try, two try, strength, and then into pullback. So that's my goal for tomorrow. And again, when you're trying to fade a range, when you're trying to trade a range, try to use words you guys know here. The term fade basically means buy as it's going higher, sell as it's going lower. I don't mean to use that terminology that you guys know in there. But the reality is because that momentum, because that range is so wide right now, the better trade here is gonna look like this, right? Where it goes back below the moving average, grab it and go, right? Because what will happen is if you try to sell that failure here, buyers will be waiting to buy it back up. So we'll get it back below back below it, and then sell the pullback from there, right? So one try, two try, failure. Again, don't take the bait. Look to sell that pullback. Bingo, right? And back down we go. Now, if you want to be a little bit more aggressive on this, right? There are two ways to get long on this market right now. Two ways to get long. Okay, first one try, two try. That's not it. Trap low, right? We talked about this earlier. One try, two try, trap low. Now, I like to use those when I see a real strong breakup, right? You see a real strong break higher here. Again, like I said, I'll bet there's probably a 40% chance we end up right back at those highs, right, at 12.5, because in all reality, if you look left, we're kind of in one big range anyways here right now. So it may end up all the way back to those highs tomorrow. If we can see that strong move higher here, right, let that pull back and then trap, right? Trap, easy, right? Easy trap low. That'll be a nice little buying opportunity there, which could easily turn into that short covering rally for that run back higher. If we get an even stronger move, right? Strength, pullback, strength, really run, yeah, grab that new channel, right? New channel there. Find that new channel. As always, right? Mark up that prior swing, buying that pullback. Right, buying that pullback. So again, it's one try, two try, failure, strength, pullback, back down. Okay, same thing goes over here. If we run back lower here, right, I'm not in any position to go one try, two try, and buy it. No way. Momentum is way too strong. So if we do go lower, one try, two try, wonderful. Let's get it up. Let's get that trend line. Let's get that swing. Reversal line, right? Hidden channel, reversal line, bada bing, bada boom, buy the low of that range. Stay away from the middle, buy the low, sell the high. And again, respect momentum, right? Respect the momentum, because momentum is very difficult to stop a market right in its tracks when it's really moving. And again, I've talked about a lot of patterns here tonight, hidden channels, two tries, failures. Grab that link in the description, right? Join that free class. You will not be disappointed. Let's keep going here. From the S&P over the Nasdaq is very similar this evening to the S&P, so not a lot is different. In fact, I think the Nasdaq looks even more difficult than the S&P, because the S&P, at least the range wasn't the majority of this chart. You can see the majority of this session today was inside of this range, right? So it's a pretty wide range, comparably speaking. The Nasdaq is bearish with a wide range and a measured move on the chart this evening. The bears took price lower before we saw that double bottom, right? Strong move down, two-legged pullback. You got your failure, right? Unfortunately, no pullback to the moving average, right? And it collapses back down, right? We get that double bottom. And note to self, guys, I know a lot of rookie traders, a lot of new traders. I remember learning about double bottoms when I was a new trader. Double bottoms do not need to be exact. They just need to be in the vicinity, right, of that area. This one is not exact double bottom. The last one in the S&P went through it by a little bit. So don't get too wrapped up in the semantics here. Don't trip over those, right, dollar bills to pick up nickels and dimes. Don't worry about that stuff. It is important to sweat the small stuff in day trading. I will tell you that much, right? One of the things you'll learn about day trading is it is a small details type of business. It's very much pattern recognition, the law of large numbers, right? Probabilities and mindset, but you've got to have that attention to detail. So there are a lot of things we do spend a lot of time on looking at attention to detail, but double tops and double bottoms, they don't need to be exact. They just got to be, right, similar, right, in that area, 10 ticks or so, right, give or take, and you get a double bottom there. So now, of course, we see that double bottom. That double bottom confirms the range, and the move lower, right, confirms the directional bias. The big clue is the width of this range, right? Like I said earlier, it's pretty much 60% of this entire range. Wide ranges need to be traded carefully because they allow momentum to develop as price rotates back and forth, right? I mean, this looks like the way that it's jumped off that moving average. This market looks bullish right now. Right, and I'm sure a lot of people are probably looking at this as a bull market. It's just we have that double bottom there. Double bottom tells us unless we see some more strength going higher, we have to look for a sell going back down, right, to retest that low. Again, the wide range can also lead to a breakout, and all we need for that is another strong leg higher for those bulls, and if we get it, we'll look for that hidden channel. So again, same thing here, right? We got one try, right, two try. I'm not going to try the old, right, one try, two try failure because momentum on this range, right, is just far too strong right now. What I will look for is I'll look for that failure into strength into pullback, get that right there, right, and then look for that sell off that high. That's a pretty easy trade. And again, same thing down here, right? One try, two try. I would love to buy that low, but just not a reliable trade. Wait for it to go up. Find that new channel, find that reversal line, right, and buy that pullback on the way back higher from there. And again, don't forget about the little trick pattern, right? If we do see a strong move higher here, right, look for that trap low. It's always one of my favorite patterns on a breakout. Look for that trap low, right? And then, of course, don't forget if we see it strength, pullback, strength, bingo, new channel, buy the low of that channel. And, of course, big round number, 7,700, back around those highs. That will likely be the objective for tomorrow. Looking good here. Looking good. Let's keep going, shall we? With some gold. That yellow metal is bearish with a spike in channel, a spike in range or trading range, a resistance trend line, and a measured move on the chart this evening. Now, like I mentioned earlier, a lot of what we've covered already is going to be a proving ground here for us tonight on gold. Everything we've talked about so far can be applied to this gold chart. First of all, a spike in channel. We talked about this earlier on oil. What does a spike in channel tell me to do? It tells me sell off the high of that channel, right? What does it also tell me to do? It also tells me go up, right, and sell back down, right? That's what spike in channel tells us. However, look what we saw earlier here. We saw sellers struggling, right? Big wicks, couldn't push through. I'll tell you right there, you see this on your chart, that is a trading range, right? That's a trading range. So if you're wondering why didn't anybody sell off that high off that channel, it's probably because we had a double bottom in a bear market, right? Double bottom in a bear market tells me what? Find that range. There's my range, and sure enough, sellers were waiting to sell up at the high of that trading range. It's amazing. Once you tune into the specific pieces of this, it starts to tell a story, right? And you can start to kind of work your way through candle by candle, and you can really understand what happened, right? And again, I call it the story being told, right, on this chart. So right now we have a spike in channel, okay, which gave bears lots of opportunity here. Strong move down, lower low, find that low, sell off the high, sell off the high. We see a double bottom in price. Easy to see double bottom in price. That causes the range. Okay, what does the range tell me to do? One try, two try. Is it a very wide range, guys? No, it's not, right? It's not a very wide range, is it? No, which means we can look for that one try, two try, failure, strength, strength into pullback, right? And pullback back down again, right? We can look for those patterns where we couldn't look for that, right? For that much, we didn't have much confidence, right? On those wider ranges. It's also important to remember too that if we do get that one try, two try back down, right? We can look for that breakout pullback pattern, right? Below the low of that range. But what do we have down there? Yeah, we've got some problems down there, right? That measured move, right? That measured move is going to make our job a lot more difficult. So that type of trade at the low of the range, probably not going to be very easy, right? Because we know, right, that a trending market will almost always try to use channels for channel rotation, and usually their big objective is that measured move, which is just below the range low. So if we do go lower, focus on bull traps instead of pullbacks to avoid chasing this move lower. So we're going to adjust our strategy a little bit here, right, on this goal. To be a bear, one try, two try, failure, strength, pullback, back down. If we go lower here, right, if we go lower, there are ultimately two things you're thinking right now. One is going to be a strong move through. Don't chase after it. Look for a trap high, right? That's one option for tomorrow. Okay, the other one will be a real blowout, right? A strength, pullback, strength. If we do get that strength, pullback, strength, and it really runs, find that new channel, right? Because that tells us now we're probably trying to make a move down to that prior week low at 89.5 here. So watch that strength, pullback, strength. If we get that real strong move, forget about the measured move. We're trying to go into 89.5 here. Look for that sell, again, off that, right, off of that high. And again, you can see hundreds of examples of just exactly these patterns I'm describing by grabbing that free trading course. I'll link it up in the description of this video. It's also in the upper right-hand corner in the information icon. Now, last but not least, how do we reverse? What does a reversal look like here on a market like this? It's the 1, 2, 3 reversal. Strength, pullback, and strength. Strength, pullback, strength, right? Strength going higher. Remember, it's that lean in, right? All of a sudden, you find yourself leaning on the desk with your elbows, right? That's the strength, right? Everybody perks up and goes, oh, really? Now, remember, a strong move higher doesn't necessarily mean a reversal, so you can't really bank on that pullback because that pullback oftentimes fails, and we end up sinking back down in, right? That's our 2-try rule. Okay, so you don't want to go buying that pullback yet, but you do want to make sure it pulls back. And then remember, that break higher are not the buyers. It's sellers. Okay, remember, there's a big difference here. It will be a short covering rally. Whenever the market starts off bearish like this, and then we see it reverse like this, these are not buyers buying here. I'm sure there are a couple buyers there. These are sellers going, heck with this. We're on the wrong side of the market. Let's take our chips and go home. Once that thing runs higher, it's always difficult to tell how far it will go. I'm never a big believer in chasing after markets. And if you're a new trader, it's really all about laying a foundation of good, healthy trading habits, right? I always want to go and buy, right, that pullback back down to that low. And of course, from there, right, the objective's pretty easy. We want to go back up and retest that 1209, right, 1209, almost 1210 area, right? That is that prior week, right? At least that prior swing high up there. That'll be your next objective if we can go higher here. So bears want to get down to that 89.5. Buyers want to get to that 097. We should be in store here for a pretty good session tomorrow. Hopefully they'll keep this range up. I always enjoy trading with ranges, right, because they do give us easy entries and easy exits. Let's keep going. Last but not least here on the euro. Euro is bullish with the 1, 2, 3 reversal, a hidden channel, and reversal line on the chart this evening. The bears started with control this morning. As you can see here, bears, of course, really took this market lower, right? But shortly after 10:30, what happened? Yeah, strength, pullback, strength. That's way too much momentum right now to call this a bear market, right? I'm going to call this a bull market, at least for the time being. So we got that 1, 2, 3 reversal. The bulls now have momentum at their back. And anytime I see a reversal, what do we look for? we look for those hidden channels. I'm going to draw a trend line off the high because literally that's all we have to work with. And looky, it lines up nicely off of those lows. I'm going to bring it up off that low, combine that now, right, with a support level. Anytime the market is bullish, right, find a support level to buy at. The best support levels, I like to use hidden channels. I like to use reversal lines, right? Combine those areas together and you get a great spot there, right, for a buying opportunity, right? One option here would be a trap, right? A trap below a prior swing, a trap into a seller failure into bullish strength into a bullish pullback. With me so far, right? So trap below that prior swing, right? Trap into that rising support, trap into failure into strength, don't chase, find that new channel, right? And buying that pullback, you know where they want to go. They want to go back up to that 16,400, right, as we go from there. What if we go sideways here? What would it look like? Double top, right? Up, back. Once we see double tops in a bull market, trading ranges, then what? One try. You got it. Two try. Back up we go. Right? Remember, look for that lower low, right? That lower low. Bingo, right? Two try rule going back up. Now, how could this thing turn bearish? Because let's not forget, right? I mean, look at this sucker. This is a pretty strong bear run the last couple weeks, right? In fact, if you look at this a lot wider, you'll notice, yeah, you could definitely look at this as like a channel here, couldn't you? Right? And we're right at the high of that channel. But here's the problem. Momentum is too strong right now. See, you could argue, and I will argue, that this is the first time we've seen enough momentum here. They didn't get momentum here. They didn't get momentum here. So if you're thinking right now of selling off the top of this channel, the problem is this is a wide channel. And what do we learn about width? When it comes to ranges, what do we know about a wide range? Momentum builds. Do you see what's happening? Is that light bulb going off? Here's another example of a wide range. This is a channel though. It doesn't matter. Channels, ranges, triangles, megaphone patterns, which by the way, I'll give you examples of those right inside of that free trading course, right? Upper left, upper right hand corner and in the description there. But again, momentum is too strong right now. And again, I would argue that this is the first time we've actually seen momentum, right? They haven't got that momentum. So the bottom line is, if you're trying to sell this market just because the top of that channel, be careful, right? Because it's not a reliable trade. It's not in my eyes, it isn't. Now, how do we turn bearish? What would a bear market look like? It would be a strength. You get it. You got it. Strength, pullback, yep, and strength. From there, then we're bearish. Find that channel now, and now we can sell, right, going back down to retest that low. All right, guys. So like I said earlier, right, everything we talked about right at the beginning of tonight's video really applies all to the rest of the charts. And remember, guys, that's all we do here at School of Trade. You know, I teach my clients every day. I take ordinary people and I help them transform into extraordinary traders, right? Getting the freedom that comes along professional trading, right? By teaching them how to use those charts, right? Teaching them a simple trading strategy, how to follow the rules of the trading strategy, keep our traders mindset, and you can take a free pass to it, free trial of it right on our homepage, right? I'm going to help you get into the habit of finding the direction, riding that momentum, staying patient for the best trades. If you're looking for a much simpler way to trade, I got a free trial right on the homepage of our website. Check it out. I'll put all the links in the description of the YouTube video tonight. I've got beginner, intermediate, advanced classes. We get some great flexible options right now for our advanced membership. And don't forget, right, I've got support here standing by anytime you need help along the way. Pick up the phone, give me a call. I'm always here at the office to help you guys out, answer all your questions, right? And of course, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room, right? We'll put the plan together. lock and loaded, and we'll have a great day tomorrow on Wednesday morning. Don't forget, 8:30 news tomorrow. That's the big mover for tomorrow morning. I will see you guys tomorrow at 8 o'clock Eastern Time. If I don't, come back and see me again tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Thanks for being here, guys. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye.